Okay, we're back with Ryan Littlestone, who's the director and trading analyst for ForexLive.com. I didn't know you were the director.
Yeah.
All right. So you set it up, or you?
Yeah, we took it over. Me and my colleagues took it over last September.
What, with your trading winnings?
Yeah, something like that. Yeah.
That's good. That's good news. I like to hear a story.
Yeah.
All right. So anyway, so Forex Live. Just a quick rundown of what it is and what makes it different and special.
Well, we give all the news live and analysis live. Every day, 24/7. As soon as the markets open, our time Sunday night until they close. Last thing in the US on a Friday night.
So hard work.
A lot of hard work. Yeah. Long days, long hours. Worthwhile. Very worthwhile.
Okay. Well, let's go into so what are your thoughts at the moment? I think you're going to talk about Mr. Draghi at some point.
Yeah, Mr. Draghi's up again on Thursday with his crew. So we're looking to see what the next chat about QE is going to be like.
Bazookas or howitzers?
Well, a lot of the market's looking for bazooka again.
Yeah.
Either before the end of this year, early next year. But
something like that. I mean, how do you've got your team. You're doing your stuff 5-6 days a week. But that's like a binary event. I mean, we don't know what's in Mr. Draghi's mind.
Mm-hmm. We don't, but we hear what he says every month. They're waiting, they're watching, they're seeing what's happening with QE, they're seeing what's happening in the world, emerging markets. But you're looking for those little changes in the statements. There's little clues that either something else is coming or it's not.
So you've got a view, the Forex Live view on what's going to happen on Thursday?
I think so. I think the market's looking for some action, and I don't think they're going to get it.
So there'll be more talk?
More talk. If it's the same old talk, then I think the euro goes higher, much higher.
Right, and I suppose that means the stock market might actually go down as well. Is that sort of the way it works? I mean, maybe it's not quite your area, but...
No, it could be. It's funny, all markets at the moment, they're up and down. One minute they're on risk, the next minute they're on QE, next minute they're on the emerging markets. It's hard, very hard at the moment to pick a move and say, yep, that's the reason for it. All the ranges are in play. We tried a breakout in dollar yen last week, couldn't make out of the big range. It's just walking the same old line. So you've got to think until one of these big levels break, until one of these big ranges break, we just trade in the middle.
Right, the last time you came in, you talked about you bought the yen, a sort of jammy trade at 118.80 or something like that.
Yeah.
Are there levels that you've got, sort of key levels in that you're sort of like in cable or the dollar yen, that you're saying if it goes there, I'm just going to pounce on that? Is there something which is that the way to do it? So
yeah.
you stay out of the market, but you just wait until the level or the opportunity that you're looking for comes through.
Yeah, I have big levels or bigger levels, that's in sort of a 2, maybe 3, 500 pip range, because the charts define the ranges for you. They say where the tops are, where the bottoms are, and if you've got the patience to wait, and you get a move down there.
There's another problem. Most people, that was what I was going to say. Most people don't have the patience to wait. They want to have a trade in there all the time. Yep. They're sitting on the computer. They're all dressed up. They've got to do something. They can't just be saying, I'm going to wait for 118.80 to be hit sometime in the next week or two.
No, that's right. Then you come down the time frames and you look at the lower time frame charts and you find the levels within that chart. But you're not going to trade a 5-minute chart and expect to make 200-300 pips off of it. You trade each chart appropriately. So if you're in a 5-minute chart, you may make 10-15 pips trading the same levels that are on that chart. It's exactly the same, doesn't matter what chart you look at. You pick your levels and you trade them appropriately.
And in terms of the people who are reading Forex Live, is it from beginner to expert? Is it institutional? Is it all over the place?
We've got everyone. Probably the bulk is retail traders. A lot of inexperienced retail traders. They come for us to help them see the markets. But we're on trading desks, in all the big banks around the world.
Right. And the retail investor, are they actually following what you do, or are they just agreeing with the ones that they already... that's the problem with retail investors. They tend to follow bad advice and they reject good advice, which obviously by definition is, good advice doesn't normally look like the right thing to do.
Well, no, you're seeing so many of these sites now that enable you to follow the trader. Successful traders on bulletin boards, you can follow that trader and imitate his or her trades, which isn't necessarily the right thing, because there's so much psychology in trading as well, as we know.
Yep.
It's how you deal with the gains as well as the losses.
That's right, and that's what we try to teach. We try to teach the fundamentals. How to set yourself up before you've even started trading. How to look at a trade, how to get your discipline right from the start. We put trades up because we're traders. So if people want to follow us, that's up to them. But we make sure that if you're going to follow us, You make sure you have your stops in place. You make sure you understand why you're getting into a trade, not because you're blindly following.
Sure. Yeah, that's good.
And I mean, the other thing is just I was talking to John Walsh about this as well before. People tend to trade with too much of their account.
Yeah.
So if they get one trade wrong, they're 10% down or 15% down. Nobody that I've ever seen in my life actually goes for the 2% rule of having, so they don't mind if they lose 5 trades in a row.
Yeah.
Which is difficult to do. Even in current market conditions, they don't do that. Is that something that you focus on, the leveraging and the?
Yeah, definitely. I trade. Probably it depends. If I'm going for a longer term trade, then I might increase my size because I may be splitting it over several months. I may be splitting a trade over several different levels, maybe over hundreds of pips. But a short term trade, you should always look at your 2-3% risk. But it's all about knowing how to trade properly and having that discipline. Before you push a button, have your stop, have your target. You can adjust them as you see fit as a trade's moving, but have those in place from the start. Because if you don't, then you find yourself 50 pips offside and you're asking the question, what do I do now? And we get that all day long. Yeah, move the stop.
Move the stop quick.
Do I double up?
Yeah.
And chase the trade back. And that's just not the way to do it. If you get blown out, you get blown out. You pick yourself up and you move on. You've only lost a small amount in your account. Then you get another trade. Move on to the next one.
Yeah.
Okay, well, on that philosophical note, Ryan Littlestone, Director and Trading Analyst for ForexLive.com. Thanks for coming in today.
Thanks.
We'll be back after the break.